The differentiator is trust. We're all kind of circling the same star. Your counterparties, your partners, your clients, they want to know that when they pick up the phone to call you for help, that you've got their back and are going to do it. You're going to be there and dig deep and find it out. And there's no amount of value that can be ascribed to that. It is the thing. It's the differentiator that solves everything.
Welcome back to Keys to Real Estate. Well, last week, TJ Harrington of Stewart Lender Services and I explored some of the big strategic questions facing title insurance in the future of our industry. Today, we're bringing that conversation down to ground level because TJ spends much of his time working directly with lenders from all across the country. So I wanted to understand what they're worried about, where they're investing, what they're expecting from their title partners, and how AI is beginning to separate meaningful innovation from mere marketing hype. We also talk about something that technology potentially threatens, and that's trust. It's a fair question to ask for an industry built on relationships and trust. We need to ask, does "we've got your back" still matter in the marketplace? Or is that just an old-timey and antiquated virtue? I think you'll enjoy the second half of this conversation with Stewart Lender Services, TJ Harrington. The presenting sponsor for this season of Keys to Real Estate is TrustLink. TrustLink brings clarity and control to trust accounting for title and escrow companies. Their specialized solutions are designed to simplify reconciliation, strengthen compliance, and safeguard client funds, helping your operations run with a greater confidence and precision. With TrustLink, you gain access to a dedicated team of experts focused on daily three-way reconciliation, unclaimed property management, and tax reporting services, giving you the visibility and accuracy needed to stay ahead of complex regulatory requirements. TrustLink is also recognized as an elite provider by the American Land Title Association, highlighting their commitment to delivering trusted, high-quality solutions to the industry. Backed by more than 50 years of experience, they've built a reputation for reliability, accuracy, and service. With deep expertise, purpose-built solutions, and a focus on accountability, they are elevating the standard for trust accounting. The future of secure, streamlined trust accounting starts with TrustLink. So visit trustlinkservices.com to learn more. TJ Harrington, welcome back to Keys to Real Estate. We're happy to have you here this week.
Thank you for having me.
Well, I wanted to spend some time talking about lenders. You speak a little bit of their language. You hang out with them. And I wanted to ask you, with regard to the market today especially, what challenges do lenders talk about that title companies underestimate? And then the opposite question, what do lenders often misunderstand about the title industry?
So the constant topic has been cost of production. So we're in a lower volume environment. We've talked about higher for longer, and that's beginning to be I think a worn phrase. What you have are lenders having to navigate significant technology investments to make their processes more efficient. Everybody's caught up in the AI craze, what is real versus what is not. And it's a very, very challenging time as a leader of a lender to figure out what is right for investment, what will actually make a difference, what will lower your cost of production, what will lower your risk, and how to build a lending operation for the future that will scale once volume returns, that will survive the lean times. And we always talk about the W in the industry. It's a W, right? And particularly the lender services space where I'm in, where we're very refi heavy, we ride that W harder than any other portion of the business. So when purchases are high and refis are low, it's tough. And when there's no default work to balance it out, or you're dealing with home equity or other places, it's a challenging time. And so you see lenders it's LL comp, it's cost of capital, it's evolving risks and cost to fulfill, it's FICO and credit score costs, it's the cost to consumers for origination, this everything. It's a really, really, really hard time to be in the lending space.
Yeah. All right. I want to talk about buying technology because I'm wondering a few things. Have we begun yet to see ROI on AI investments? And you noted they are still making investments despite these difficult market conditions, but tech budgets can't be infinite. So where are people seeing a real value from the investment yet?
Yeah, so it's an interesting question. I'll give a shout out to my friends at Gateless. They have an automated underwriting platform that's incredible. They've done a great job with it. It's a story for AI, I think, everywhere, where you're taking things that are the grind work or the manual portions of jobs and pulling them out of the workflow for individuals and enabling your smart people to be even smarter, to be more efficient. And we're seeing a tremendous amount of success for that. And that's really where there's been core returns. I think once you go beyond that, it begins to get a little bit murky. I will say, outside of just specifically mortgage, but the consumer direct space or even servicing and sub-servicing, the rise of agentic AI in call centers. We've seen that. One of the great success stories that I saw, and I won't say who, but it's a servicing executive that I admire very much who lives in Charlotte, talked about his call center and some of the challenges of staffing for multilingual consumers. Maybe they transacted in English. English is not their first language. There's complex things in the servicing space that have been challenging for them to understand. And being able to deploy an AI agent to speak whatever language or dialect that they have in their native tongue, because AI has that possibility, and being able to give a consumer that experience and answer that is unbelievable from a consumer experience perspective. And from his perspective, not having to staff someone that speaks 12 languages. That's a hard thing to find, right? And that's been a thing. And there's rules and regulations about dealing with consumers in native tongue. If you solicited them a certain way, maybe you have to work with them in a certain way. And that's very, very challenging. And so just things of that nature where AI is making the world better, less expensive, better service, less risk. Those are the stories that we're seeing. I think the larger question is, what's the ROI? What did it cost to get you there? And those things are still being vetted out.
Yeah. All right. Well, in some ways, our market is getting fragmented. In other ways, it's consolidating at levels I haven't seen in my tenure. And I'm wondering, from a lender's perspective, are entire ecosystems feeling more important to them right now, or kind of the best individual tools and they'll run point to point like we were doing 20 years ago? What's
I
the
think
lay
it's
of
a
the
little
land?
mix of both, to be honest with
Okay.
you. And
Okay.
I will say, in this cost conscious environment, our strategy has been to be an end-to-end provider. And the reason being is just the cost to administer vendor management, the cost to have a one-off vendor doing one particular narrow set of skills or tools is just really, really high. And so for the juice to be worth the squeeze, you've got to have a really significant business case. And so we focus on bringing all the best in class we can that's out there that we can build by whatever. And Stewart's been a very acquisitive company to that end over the last 5 or 6 years. And so we think we've bought or built the best in class tool sets. So we're trying our best to be everything to that. But what we've seen is a partner that can do multiple things across an ecosystem has, for the most part, been tremendously advantageous for the lenders in that they can negotiate pricing, volume breaks, to take into consideration the whole thing, because everyone's so price sensitive today. Now, there are obviously exceptions to that. There's sensitivity around what touches the consumer, so point of sale. There's things that are sensitive around NPI. And so those pieces tend to still be a little bit more bespoke.
So from an individual provider's perspective, does it make sense to get yourself on every platform that might be selected or used by a lender, or does it make sense to be more selective, or how are you advising agents on
So
that?
it's really interesting. I talked to both. Obviously, I'm in the lender services world, but I do a lot of work with the national agents, and I do a lot of with Scott Gillen, National Agency, and Ian, and I do work with agency and direct operations, talking about the lending world. And what we've seen is a very, very big change. So number one, the lender services space has always been predominantly consumer direct businesses. So that call center refi business. More and more of that work has shifted to IMBs that are either doing kind of a consumer direct model away from banks, or they're doing a distributed retail play, or it's correspondent wholesale brokerage. So we see the rise of super brokers and kind of that regional, more retail level service, even in refinance. That's been a market shift. So to that end, there are incumbent LOSs that make sense to be involved with. So Encompass is the primary driver in that marketplace. And they have a new kind of rubric of integrations called EPC, Enterprise Partner Connect. It used to be, to tell the tale of the industry right now, you had Black Knight and you had ICE. Black Knight got bought by ICE, but some portions of it got carved out from antitrust and other perspectives. The part that got carved out was Black Knight's loan origination platform and what was legacy known as Really C. All that got carved out. And Really C was the core integration platform for Encompass and for MSP. And post that, ICE is a company that always wants to control its own technology destiny. And so they've rolled out EPC and kind of modernizing that connectivity to Encompass for a many myriad of reasons, including old legacy tech, moving from SDKs to a real actual integrated solution. And so EPC is out there as a place. And if I was a mid-size agent with the resources to do integrations, that would be the number one that I would have on the roadmap. And there's some great companies out there that do that work. Shout out to my friends at ShortTrack who do a great job. They are the best data plumbers in the industry. I tell them that all the time. They plug it together and they do a really nice, they do a really nice job. And so I look at companies like that are subject matter experts in those integrations, and what does that cost and what do you get out of it? And kind of that EPC Connect gives you a one-to-many integration option where that tends to be the dominant ecosystem. And there's one-off LOSs or other places. There's what you need to do to be a partner for Chase, a partner for US Bank. And that's not the purview of typically a local agent.
Right.
That tends to be a lender services type play. But integrations and delivering in an automated manner is the key to success now and in the future.
Okay. And then one last oldie but goodie I want to take your temperature on in this evolution. We've talked about the evolution. We've talked about especially the technology changing very rapidly. This has always been, I'm back in the realm of title and settlement now, and lending too, for sure, a high trust business. Yes. And so much of that high trust piece of the puzzle gets lost talking about automation and AI and the need to do faster, quicker, cheaper all the time. So when you talk to your lenders, are they still valuing that trust? And if so, where and how and for what?
Yeah, absolutely.
Okay.
So for my world in particular, National Agency and Lender Services, the SLAs, the title turn times, the appointment confirmations, the post-close returns, the funding, the recording, that's table stakes, right? You need to be able to do that. That's what it is. The differentiator is trust. I'll give you a really great example of a place. Default. So in the default world, you have allowables under the GSEs and FHA. So our pricing is not materially different. We're all kind of circling the same star. What it comes down to is relationships and trust. Your counterparties, your partners, your clients, they want to know that when they pick up the phone to call you for help, that you've got their back and are going to do it. You're going to be there and dig deep and find it out. And there's no amount of value that can be ascribed to that. It is the thing. It's the differentiator that solves everything. And that's it. Just like that local real estate agent has that trust with that local broker and refers business because they can get it done. And they go to their local title partner to get that done. There's that trust in there of ability to execute, the ability to work together, the ability to grind through the hard problems together. That is just the thing that we do the best.
So we've got your back still matters.
100%. Because that's everything, right?
It has been. I didn't know if we were losing that or not.
No. I mean, there's always a what have you done for me lately mentality in the market.
Well, to your point, that's table stakes too. The excellence as defined by them, that's table stakes.
Whatever the definition of excellence is table stakes. But the differentiator is I am the biggest cheerleader and the harshest critic of title at all levels.
Right.
I will say this roundly. There's so much excellence in our industry, and the competition is that thing that puts you over the top is the ability to dig deep in hard situations and come up with a solution.
I'm glad to hear you say that's still the primary value, because in constantly focusing on how do we go quicker and how do we go cheaper and how do we do that part can get lost in the conversation when it's really everything. Okay, lastly, I know I have to let you go, but if every title executive listening can make one strategic decision differently over the next year, what would you encourage them to do? Sorry, just get one.
It's so hard because every operation is so different. Every person's got a different story. I think the biggest thing is make smart investments in AI. Don't buy into the hype. Look at what's happened in the education space, where there's a million, bajillion AI startups that have all fallen flat and spent tax dollars. You see that same story where there's so much smoke and mirrors. And my joke has been, and this is unfair, but a little bit, that a lot of AI companies aren't AI, they're all India. That there's a people process behind the standing up of AI, and it's offshore. It's not true technology, and vetting that out and what is hype and what is not is very, very difficult. So I think that's number one. And it's the same story in my space too. Pick your partners carefully. Pick people that you trust with a track record of delivery, with financial strength, with longevity, because it's not a sprint, it's a marathon. We've all got to be here. And going through that way is a timeless classic value, picking somebody that you can be in business with for the long haul.
I'm very glad to know that that is not changing anytime soon, TJ. Thank you for your advocacy on behalf of all of us in this industry. Thank you for being so aware and up on everything. And I'm going to bother you from time to
I,
time and ask you to come back and say, TJ, what are you
absolutely.
thinking about today?
And everyone on the Stewart title, feel free to holler at me. I'm here for the industry. Stewart has been a leading voice in Washington and other places. Mary Thomas, who's in our organizations on the board at Alta, we are someone that's carrying water very, very hard for the future of title insurance. And I'm proud to be a part of that.
Hands we can
Yep.
get.
Thanks, TJ. It's always so great to talk with you. And one thing I appreciated about this conversation is that TJ never treats technology as the destination. Whether he's talking about AI, automation, integrations, or operational efficiency, he keeps coming back to the same idea. Use technology to make good people better, not to replace the judgment, relationships, and trust that define this business. That's a perspective I suspect will age quite well. My thanks again to TJ for joining me for these two conversations and for always being willing to tackle the difficult questions facing our industry. If you've enjoyed today's episode, be sure to subscribe so you don't miss future conversations with the people shaping the future of real estate, title, and settlement. Thank you for joining us on Keys to Real Estate, brought to you by October Research, where we know that knowledge will always be the competitive advantage.